Welcome to another edition of AML Conversations. I'm John Byrne with AML Right Source, and today our panelists are going to dive into an issue or series of issues that I believe, as AML professionals, we need to better understand and better able to respond to, and we'll talk about those in a minute. But with me today from the Human Security Collective is Thalia Malmberg and Sangeeta Goswami, and I really appreciate them. We've interviewed the organization in the past and some of their peers and colleagues in other groups, but I'm going to start with the premise, as I just said. AML professionals, we have these roles and responsibilities. I've been in this space for decades, and we have to deter financial crime, terrorism, all sorts of aspects of money laundering. And those roles and responsibilities are dictated by regulation, law, and in some cases in the U.S. recently by actually executive orders, which we're trying to navigate like everybody else. But we don't spend as much time on the consequences of our responses, whether they be intended or not. And the Human Security Collective, like a number of other humanitarian advocacy groups, spend a lot of their time and energy pointing those out, but also working with many of us in our sector. So I'll start off with this. If you wouldn't mind, folks, describe the mission of the Human Security Collective and maybe a brief history of what organized you to the roles and responsibilities that you have.
Yeah, sure. Thank you so much for having us. Human Security Collective is an NGO based in The Hague in the Netherlands. And our founders were part of a development organization in the Netherlands, and they really noticed where they were also funding local NGOs all over the world. And they really noticed this trend post 9/11 where they were having a harder time getting funds to the partners. The partners themselves reported having issues around banking and experiencing just sort of like a heightened securitization around being able to use financial services. And a lot of this is sort of what sparked the start of Human Security Collective, just critically reassessing some of these security frameworks, looking at how some of, like you mentioned, the unintended consequences, because a lot of this was put into place sometimes very quickly post 9/11 as sort of a panic response almost, the idea that this could never happen again. And so we needed as many measures as quickly as possible. And what we saw sort of in the aftermath is that much of this wasn't necessarily based on empirical evidence, but was very much sort of a quick response and had a lot of knock-on effects that actually, if you took sort of the broader view, did not have a positive effect on, efforts, actually long-standing peace-building efforts, humanitarian efforts that, actually undercut oftentimes sort of the source of where a lot of terrorism or violent extremism comes from. So it had sort of the inverse effect, actually.
Yeah, that is so true. I was with the American Bankers Association on 9/11, and obviously an advocacy group for the financial sector. And we were told in no uncertain terms that the legislation that became the USA Patriot Act was going to pass with or without our support. And obviously everybody supported a response, but I 100% agree. It was a 300-page document. There were some things in there that needed to be assessed regarding the banking industry. There was no question about some additional requirements and all that. But I definitely understand, because the initial reactions in the early days right after 9/11 was actually against money service businesses. They were seen as not as regulated as banks, which was true, but also banks were told basically by our regulatory supervisors that we had to be cautious about doing business with MSBs, and they really struggled to get what we call now financial inclusion. So obviously we definitely understand that that's translated to the world that you're in. So again, the premise absolutely correct. I don't know, Sangeeta, do you want to mention anything else about the premise for the organization?
Yeah, no, I think first, I think thank you very much, John, for having us. We really appreciate, the platform and being able to reach an audience we wouldn't, normally reach. But I think Thalia has been really comprehensive. And, you were rightly saying that, at a stroke, banks were made gatekeepers, right, in this whole sort of AML CFT framework post 9/11. And similarly, sort of, there was this whole recommendation that nonprofits now needed to be overseen for terrorism financing abuse. And that's where a lot of the consequences stem from. It was actually the only legal entity to merit a recommendation of its own within the terrorism financing framework that was appended to the FATF money laundering framework. And we are still dealing with the consequences today, basically. So, yeah, so as an organization, I think we've worked hard to understand that, to raise awareness around that, and to mitigate some of the consequences of that over the past 25 years almost now.
Right. So two-part question or themes I want you folks to talk about. One is we want to talk about the FATF, obviously, because that has a direct impact on many jurisdictions. And as you know, the U.S. is under their mutual evaluation that's going to be reported in 2026, which we could do a whole program just on that, just given some of the things going on. But the current president from Mexico of FATF has been very vocal, in my opinion, and very strong about the unintended impacts that you folks are so concerned about. And obviously, it's in part a reaction to Recommendation 8, so maybe talk a little bit about that. But also, I'm curious your view on the direction that FATF seems to be going under this president, because it seemed from the sidelines, and I'm generally aware of FATF processes. It seems very progressive in a good way, meaning that she recognizes the unintended consequences. So talk a bit about her role, and then also some of your concerns that are trying to be addressed by some of the changes to Recommendation 8. Or maybe we should also start with what is Recommendation 8. So I'll throw that back to you guys. Yeah.
Yeah, thanks, John. I think, there were these 8 special terrorism financing recommendations that were added on to the money laundering recommendations, post 9/11. And what came to be Recommendation 8 in the now sort of 40 recommendation framework is solely about nonprofit organizations and countries having to regulate and oversee their nonprofit sectors so that they're not abused for terrorism financing purposes. Of course, as Thalia was saying, much of this framework was the product of the fevered days after 9/11, so to speak, and that particular context, but of course was applied universally. And as Thalia was saying, not based on, robust empirical evidence, as it turns out. There was some evidence at that point that some charities may have been used to transport to sort of transfer money for those attacks, but it was again a particular context, a particular time, a particular type of charity. But of course, we are left with this entire recommendation, with countries needing to oversee their sectors so that they're not abused for terrorism financing abuse. And the language then post 9/11 in Recommendation 8 was that nonprofits all over the world are particularly vulnerable to terrorism financing abuse. And so, of course, then the oversight sort of became very security focused, the oversight of the sector. And that, as Thalia was saying, had an impact on the sector as a whole, whether that was financial access, whether that was the setting up of organizations, the operating of organizations, the whole concept of, freedom of association, so to speak, all of that was impacted. And of course, in our sector, all of this costs lives, right? I mean, bankers often see this as friction. Bankers are supervisors in the system. But, when it comes to, the day-to-day functions of NGOs, this actually costs lives. So we sort of started collecting all this, in data and information, set up a global nonprofit coalition on the Financial Action Task Force, and, started presenting this evidence to the FATF. And finally, they sort of recognized some of this and, changed the wording in 2016, dropping the phrase particularly vulnerable and saying that countries needed to take a risk-based approach, when they're regulating and overseeing nonprofit organizations. But still, we didn't really see that much of a change on the ground. And then, which is when they set up this whole unintended consequences work stream. As you're saying, the current president, who was then vice president actually a few years ago, actually took the lead and, really pushed this agenda forward. And they did this whole scoping of unintended consequences of the implementation of the FATF standards. And they came up with 4 unintended consequences. They were sort of financial exclusion, de-risking, non-profit organization suppression, and the due diligence, the due process harms of not implementing the recommendations in the way they are meant to be. So the FATF started working on addressing this within their standards. So they changed, revised Recommendation 8 again in 2023. And this time it says very clearly that, most nonprofits in countries are low risk, and that countries need to really take a focused, proportionate, and risk-based approach when they regulate the sector for terrorism financing, so that there is no harm caused to the sector and that the legitimate charitable activity is not impacted. So from particularly vulnerable to risk-based approach to now do no harm, is what it says. So I think a lot of the we've had, the current president has been instrumental in pushing a lot of this through. And of course, then we've also had work on, financial inclusion and recommendation 1, but we can talk about that in a bit. Thalia, I don't know whether you wanted to add something to that. Yeah. Okay. Back to you, John.
So, so they've made adjustments. They've listened. Going back to the parallels to the U.S., right? As you know, you folks participated. It took a number of years. We did some work. Started with the World Bank, and then when I was with ACAMS, we brought in the private sector, and we were able to finally get some language from the regulators, some what I would consider to be positive language, guidance documents saying not all charities are the same. So sort of similar to what FATF has done. But I think there's been concern that it didn't, not that the language didn't go far enough, but to your point, Sangeeta, that on the ground, not much has changed. And so I'm curious about how do we measure change? And I'll throw this out. So coming from the financial sector, obviously, having banking relationships with charities are valuable, but they're not big money makers, right? So the banks have to make a decision on that. And many banks are very active in their community. So that profile is there. But if they also think that the regulators are going to be, I won't say harder, that's the wrong word, but they're going to be, let's say, more concerned about the due diligence done by the bank regarding the charities, the bank may simply say, we'd like to do this, but we don't. It's too much of a financial and regulatory headache. So they may not do that. So we've seen some of that. But we've seen a lot of our peers say, we hear you folks, we want to do better. But I guess the larger question is, how do you measure success? So if you say you don't see changes on the ground, obviously jurisdictions have to make some changes based on what FATF has said. So what do you folks think will show that there's been not just progress in language, but progress in operations?
Yeah. So we look at this from different levels. So I think what Sangeeta was describing now also holds a lot of promise, especially when we're looking at, FATF changes that hopefully directly impacting also the ways that countries set up their supervision of the MPO sector.
Right.
But you're right, it's trickier when we're talking about financial institutions because their risk matrix includes much more than just what the FATF says. So the FATF saying MPOs are not necessarily particularly vulnerable is a bit of a drop in the bucket in terms of, all of the considerations that are made, including also, the sort of internal risk analysis that they do, but also looking at the risk analysis that the country does. So for us, what we've seen work quite well are, in the Netherlands, for example, is the roundtable, multi-stakeholder roundtables, where we bring together the various banks, the ministries of finance, the regulators, and really have a more comprehensive discussion where everybody, like you said, that fear really remains with banks in terms of they'd rather do too much than too little in terms of the MPO sector, especially like you mentioned, because they're not necessarily big business, even though the sector is enormous. So the sector as a whole is big, but the individual NGOs might not be. And so this is really a challenge, but we've really seen success in these approaches where everybody can let their guard down together, where the Dutch Banking Association can agree on, okay, what are some risk lowering factors within an NGO, and then we can just sort of lower the burden also on the financial institutions, which allows them to take on more MPO clients.
Let's talk. Go ahead. Sorry. Go ahead.
Yeah, no, sorry, John. No, just wanted to also say that I think, the changes to recommendation 1 may also serve as incentives to financial institutions, because it says very clearly now that where countries identify lower risks, they should allow and encourage simplified measures as appropriate. So, there is a change from the earlier countries may decide to allow simplified measures to countries should allow and encourage. So I think, the incentivization is there now. And, hopefully if supervisors are also supervising with that in mind, so doing a more holistic supervision, not just of financial integrity, but financial inclusion as well, then I think banks will have more comfort in, in doing this kind of simplified due diligence for the vast majority of low risk NPOs. But also just before this podcast, I was looking at, numbers of, especially in the US for your audience. And it's staggering, really. Nonprofits generated $1.4 trillion in economic activity in US in 2023. It accounts for 5.2% of the national gross GDP, gross domestic product in the US. There are slightly more nonprofit jobs in the US than manufacturing ones. So manufacturing is 12.7 million. Nonprofit is actually 12.8 million. So these are huge numbers. So it's not a sector that's small or insignificant. So when there are impacts on the sector in terms of financial access, financial inclusion, or just impediments to its work, it has an impact on the economy as a whole, and on communities and people. So, just to put that in a bit of perspective, really, I think for your listeners as well.
Well, that's the sort of thing that we need, right? We need those elevator conversations where you say what you just repeated, those statistics. I think that's important. The other question I was going to have for both of you is, you have some jurisdictions that you believe are doing the correct thing in terms of fixing the issue, in terms of language and oversight and all that sort of stuff. Have you done reports, or have your peers done reports that say, for example, the Netherlands ranks here from your perspective, US is here, this is what something like that, so people could look at, especially multinational institutions, and say, our clients are in this jurisdiction. That jurisdiction has definitely made some changes that are positive in terms of inclusion. These other jurisdictions, that they made some of those tweaks that could go the same way. Have you or your peers done some recommendations like that?
So not ranking necessarily, but we do sort of document stories around exactly what we were describing. So we've documented the multi-stakeholder process in the Netherlands, also spoken to a lot of similar initiatives in countries all over the world. There's really successful ones, for example, in Nigeria, and really sort of it really depends on the context. Many of them are very different. And so in much of our documentation, which we can share with you to share with your listeners, we really describe sort of what are the elements that have made it successful and what types of initiatives have come out of it. And we also describe other ones, like, for example, Austria recently had a mutual evaluation process that I think many can learn a lot from. They worked really well together with the civil society. Did really good sort of evidence gathering also of where exactly the risks are, and desegregated that in a very impressive way, where it wasn't sort of clusters of NGOs that were high risk, but they actually looked at most NGOs as being low risk, all NGOs actually as being low risk, but some NGOs having higher risk programming, sort of desegregating on that basis, which I think many can learn a lot from. So we can share all of those resources with you for sure.
That'd be great. So our audience is global, but obviously we have a big presence in North America. I want to know your thoughts on sort of what I would characterize as the chaos in the U.S. from a number of perspectives. Obviously, there's been a series of executive orders that the banking industry is navigating, but there's also been severe cuts to foreign aid, USAID, and other areas where the U.S. used to be pretty prominent, and obviously that's got to be impactful to organizations that you work with. Give us a sense. I'm not asking for a political answer, but just in terms of the impact that it's having, and then vis-a-vis the EU. Is the EU is a different animal, my words, because it has all those jurisdictions have to agree and all that sort of thing. But I have the sense that the EU is still being very proactive in this space. And maybe that's too much of a generalization, but the U.S. where we are in 2025, we're going to have to get back a lot of things that we were doing in the past. But just long-winded way of saying, what's your general take on the impact on what's going on in the U.S. and if you can compare it to the EU, if they're comparable?
Yeah, sure. Thanks. Well, I mean, just to center sort of the biggest impact in terms of, for example, the dismantling of USAID is Boston University is doing a current tracker of impact that's actually quite conservative, because they're calculating, that the programs that are ongoing will continue to be funded, which is also sort of questionable. But
Right.
They estimate that as of November 5th, that the dismantling has already caused the deaths of 600,000 people. So the impact is impossible to understate. It's really large.
Right.
And that is sort of the largest of those impacted. But of course, across our sector, we've seen, entire organizations having very difficult times sustaining themselves. And especially a lot of these efforts that we are discussing, which really gained a lot of traction, kind of going on the back burner because many are in survival mode. So Sangeeta can speak a little bit to the European context, but we really see, even where, for example, there were efforts to unite some of these loose national multi-stakeholder dialogues into a more global one. All of that has sort of taken a backseat at this moment, and we hope sort of they can be restarted. Sangeeta, please.
Yeah, no, I think the other very worrying trend is, the spate of executive orders recently and the surge in those designated as terrorists, so cartels, organized crime groups.
Right.
So the lines between sort of domestic and foreign terrorism, are also blurred with introduction of terms such as political violence, for example, to monitor civil society groups, and, the ability to review the tax exempt status of nonprofits, for example, with little or no oversight in the US. So I think those are trends we are monitoring, and this is not something that's only applicable to the US. For example, we see that in other countries, because terrorism per se is not defined in the multilateral system. So it's up to countries to define terrorism and therefore terrorism financing. So, it's really as much an executive decision. It should be a legislative decision, but sometimes, in many contexts, in authoritarian contexts all over the world, it becomes an executive decision. And then you see the fallout of that. And, in many places in the world, nonprofits speak truth to power. So they're often amongst the first who come, under the cosh, so to speak. So, and I think the FATF framework gives countries the tools sometimes, through institutions and other frameworks to abuse them in such instances. And the FATF, being a technical body, can then do very little about it, because these are at the end of the day political decisions. So we see that a lot across the globe. So yeah, a bit gloomy picture there, but that's just the way it is with terrorism and terrorism financing being part of this framework, basically.
Yeah, there's no question. And I've done other conversations with experts in anti-corruption. And obviously, the more corrupt activities occur, the more humanitarian groups and just citizenry are impacted. And that's also going on. I want to sort of tie this up in a positive, proactive way, if we can, even though I very much share your concerns. AML professionals, CFT sanctions professionals in financial institutions, in fintechs, in other organizations that have the roles and responsibilities we talked about, what can they do? Because there definitely are examples where the industry that I'm from has been proactive in anti-human trafficking, in dealing with elder abuse, and certainly, as I referenced early on, the work that we did with ACAMS and the World Bank for the banking industry to better understand all the things that you folks live in and day out that we didn't know before. I mean, we sort of understood that charities were being impacted, but not to the degree that we know now. And that was bankers volunteering to be part of stakeholder dialogue. So I do believe there's a lot of good people within our industry that want to get their job done, but also want to say, what can we do to stop the unintended consequences? So I know there's no magic bullet, but that's probably a bad analogy. There's no one way to fix everything. But what would be some of the recommendations? I'll start with one. Obviously, participate in stakeholder dialogue so that we better understand your world and you could better understand the banking world. Like, what are our obligations? We started that with that other project a bit ago. But besides that, what else would you recommend? What are good source materials for bankers and others to stay on top of all the things that you folks are covering? So give us some recommendations.
Yeah, I think, now I think the standards themselves, so the FATF standards with the recent, financial changes to the financial inclusion bit or in Rec 1 and the guidance, are actually steps in the right direction. So I think we need to socialize that with banks. So, who does the socializing? How is it done? And probably more of a buy-in from the C-suite, really, because often these things are looked at within compliance departments, or within ESG departments. But, the CEOs and others need to also, I think, buy into the agenda, the inclusion agenda, because at the end of the day, it is, if people are included within the system, there's less scope for, for terrorism financing or money laundering in the sense that, the system is more, will be more secure in that sense. So I think that's one. I think definitely taking part in stakeholder dialogues. But, you mentioned banks and NPOs, but I think there's another player here that's equally important, and those are the supervisors, right? So the central banks. And, often it's difficult to get them to the table. And I think, they need to take on more of the risk or give more guidance on the risk, like, they have sort of done in the Netherlands. So I think the risk indication or clarification needs to come from the supervisor to give the bank more comfort, in that sense, because the bank at the end of the day is a profit-making enterprise, and they will make their own calculations, based on that, whatever the incentive might be. But I think, if the risk calibration is clearer at the supervisory level, if the supervisor can offer more comfort, takes on some of the risk, I think then we have a more, robust, inclusive system, I think. Thalia, I don't know whether you wanted to add something onto that.
No, No, absolutely agree. Yeah.
You know, the focus in this administration on de-risking or debanking is not designed for your world, but that perhaps we use some of their same language for the regulators to say, you want banks to, quote, not discriminate against possible account holders. They need to not discriminate against those that are performing charitable and humanitarian works. And I think, so I agree with both that, but also the supervisors have to be very vocal about that, because at the end of the day, they're the ones making the examiners are making the decisions whether the banks are doing appropriate risk-based approach to their account holders that either are medium or high risk. So I think that's right. So, all right, let me end on this note. Thank you so much, both of you. Where can we get more source material? Plug your website or other sources where AML professionals can go. I've talked to them in the past about the Charity and Security Network. They have an excellent newsletter of all sorts of issues that are in the trades or in the major media markets. So that's always that's a free newsletter. What other places can they go to stay on top of this very important issue?
So our website is hscollective.org, and you can also look at the FATFplatform.org, where we have more information about the global nonprofit coalition.
Perfect. Thalia, Sangeeta, thank you so much. More importantly, thank you for the work that you do. It's so essential, especially now, but always. And hopefully, we'll have you or your colleagues back. We'll see some additional progressions in this space and some successes and improvements. And I think what I'm learning from you today, and obviously I have some idea of the issues, is when there are good examples out there, we'll call them case studies or whatever, and if we can show that to other institutions and jurisdictions, that sometimes that works almost better than regulatory language. Hey, here's what this bank did, that sort of thing. So we'll continue to work it from our end, and definitely appreciate you sharing your insights today. Thank you so much.
Thank you.
Thank you, John, for the platform. Thank you.